Good morning and welcome to Stock Market Today and happy Friday, May 17th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. If you're on StockTwits, I'm there as well. Same handle, at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Let's dive right in now. U.S. equities were higher in Thursday's trading. They finished off the best levels of the day. All sectors finished higher on the day, however. Treasuries were weaker across the curve. The dollar was higher on the major crosses. Gold down 90 basis points, and oil was higher amid international tensions, read Iran headlines. WTI crude up 1.4%. Trade remains the key driver of sentiment in the equity market. The Trump administration signed an executive order that could target Chinese telecom companies Huawei and ZTE. As we said, all sectors finished higher on the day. Materials, fins, and discretionary outperformers, energy, REITs, utilities, underperformers. As we get to the desk this morning, though, we're under pressure. S&P futures down about 40 basis points following a three-day rally for the market. Asian markets mostly lower overnight. China was down nearly 2.5%. European markets are mostly weaker. Treasuries are stronger across the curve. Dollar is lagging on the yen cross while stronger on the euro. Gold down 10 basis points. WTI crude adding on another 80 basis points. Interesting dynamic at play here. Stocks rally for a third consecutive day, and then we faded right at last Friday's high. Closed back above the 2850 level, so that does remain important. Support right now, the way I see it, 2775 around your 200-day moving average to 2800 resistance. 2900 to 2950. RSI did not become oversold on the pullback. That's important for the bulls. And Chaikin money flow remains bullish. Also important for the bulls. What I think we could see here is a bit of a trading pattern. A consolidation continues to take shape. We're going to get into why I think that is a little bit later in the show. But as you know, on Fridays, I look at key themes and relationships. And that's a big part of the thought process. But for now, let's continue to focus on finding the leadership. And one of the things that I'm starting to see in the leadership is defense. We'll take a look at what that means in a little while. Market in a minute. What am I writing about today? My note to Chaikin Analytics clients. Stocks rally for a third consecutive day. All sectors finish higher. We hit that one already. Trade, driving sentiment. U.S. targets Chinese telecom equipment makers Huawei and ZTE. We're going to see what that meant for some U.S. semiconductor companies, U.S. listed semiconductor companies. Key relationships and themes in the market point to risk aversion. Growth over value remains a favorite theme for me. Futures point to a lower open today, as I said. Let's look at the power bars. Dow remains skewed to the bearish side. 5 bulls to 6 bears. S&P 500 still regaining. Remember back on Tuesday morning, this was negative. Now it's back over to the bullish side. 118 bulls, 78 bears. 92 basis points on the days. NASDAQ, small outperformer, 24 bulls, 16 bears. Small caps underperforming when trade headlines are dominating is a message to me. What is that message? It's a message that tariffs, should they stick, could pressure margins. Higher costs on goods for companies in the U.S. that they are unable to pass on to their customers could hit margins. Small caps in a trade war should be outperforming because most of their revenue is here in the U.S. But 25% tariffs are going to start to bleed through to their costs. That could impact margins. Small caps have been underperforming the market during heightened trade tensions. You know how I feel about small caps. Bonds down, sending yields slightly higher, although bonds are rallying here this morning. Materials had a nice rebound day yesterday, up 1.4%. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish. Stock of the day today. Chaikin Analytics clients would recognize Northrop Grumman because it was my bullish stock of the day last Friday. Now our algorithm has it as the stock of the day here today. So it's kind of interesting. I guess you can say that my brain is working along the same lines of as an algorithm. Slight pat on the back for myself there this morning. Northrop Grumman, Aerospace and Defense, been a strong group. Up 3.5% yesterday. Very bullish rating due to very strong earnings performance, very strong price volume activity, very positive expert activity. Stock does have poor financial metrics, but let's dig in because the 20 factors, 5 in each of these categories, kick out a very bullish rating. Strong trend, strong industry group, type of name we want to own. And what do we have now? We got the market and the model getting into agreement. Bullish rating, and the stock is starting to outperform. Nice little breakout through this resistance level at 290. Bullish money flow. Now, the stock is overbought here in the near term. Rounding out of an overbought condition, let's look for consolidation that holds above 290, that sets the stage for another entry point. Now, again, I had the stock here, back here. So far, it's performing well. So far, it's outperforming the market, but I'm not going to chase it here. Don't sell it. If you took the trade last Friday, you want to stick with it. And as long as we hold above those key support levels, let's wait for an oversold condition to add. But Northrop Grumman looks compelling to me on the long side of the portfolio. Sector tracker, here's what I was talking about. Over the last 5 days, and you've heard me talk about it for the past few days, REITs, UTs, staples. Folks, this is defense. This is risk aversion. This is yields coming in. Leadership is being driven by defensive parts of the market. That doesn't mean the market can't rally in that environment, but you want to make sure you're positioned properly. I would say the theme is go forward with caution. Materials, energy, and comms, middle of the road along with tech. We want to see tech continue to do well. So far, materials and energy, these are just look like counter trend moves to me. Discretionary, healthcare, industrials, and fins all lower over the past 5 days. Financials, those falling rates are definitely a headwind for financials. Discretionary, part of what I was just talking about. Higher costs, can they be passed along to the consumer? We're going to find out. Or will margins be pressured? Let's hit our industry in focus now. Mining services over the past 6 months has underperformed the S&P 500 by 14.3%. And its power bar ratio, which measures future potential, is weak. 7 bearish or very bearish stocks for 4 bullish or very bullish stocks, currently ranked in the bottom third, number 14 of 21 subsectors. Has moved down 1 slot over the past week, and some of the names we want to think about here. Royal Gold, very bearish. Freeport-McMoRan, very bearish. McEwen, MUX, very bearish, but I would point out that McEwen has, it's a $1 stock, so let's not focus our attention there. But let's focus our attention on the potential setup in Royal Gold. RGLD is the ticker symbol. RGLD closed at 83.51, down 1.1%. So down in an up tape yesterday. Big underperformer. Weak trend, weak industry group. We are fishing in the right pond if we're fishing for short ideas. Market and model and agreement. You can see stock started to underperform back in mid-April, and now the rating turns bearish. Stock is overbought with bearish Chaikin money flow. It did trigger one of our relative strength signals yesterday, a relative strength breakdown signal. That's one of our proprietary signals below the declining long-term trend line. For those of you who are looking for bearish opportunities, this is what the setup looks like if you're following our process. Lagging stock in a lagging part of the market becomes overbought within the context of a downtrend with bearish money flow and triggers a relative strength breakdown signal. Folks, if you trade to the bearish side, maybe you want to consider some put options or put spreads in RGLD. Moving on now. Yesterday's S&P 500 gainers and losers. Cisco's earnings sent that stock higher by 6.66%. Not sure if we should take this as an ominous sign. LIN up 3.75%. No real news there. MTD, same story. 3.58%, 59% to the upside. Positive commentary on defense spending, as well as the Iran headlines, send our bullish stock of the day from last Friday. Northrop Grumman, NOC, up 3.5% on the day. MPC up 3.26% on news that Third Point took a stake in the company. Taking a look now at the loser side of the board. NKTR, their abstract at ASCO was not well received. Sent the stock lower by 7.55%. Let's hit on AOS. AOS down due to a short sale report. Not sure who it was by, but it was enough to send the stock lower by 6.27%. The other names, Xilinx, Qorvo, Skyworks, are all leveraged to the Chinese telecom equipment makers. Huawei, ZTE. So if we're going to take action against those companies here in the U.S., it is going to ripple through. These are called derivative plays. You know, suppliers of the equipment companies are going to get hit. Xilinx down 7.25%, Qorvo down over 7%, and Skyworks down 6% on that news. Now, we did get some positive developments in the semi space overnight. AMAT trading higher. As well as NVIDIA, but you know we watch this space closely. and its underperformance, the relative performance of semis against the market, bothers me. Continues to trend lower. Read my note today. Let's go on to the key themes and relationships, because I want you to see what I'm looking at when I talk about signs of risk aversion in the marketplace. We already looked at the leading sectors, right? Utilities, real estate, and staples. But now let's dig under the surface. Let's look at some of the stuff that people don't normally look at. Let's look at credit. As equity investors, we should be paying attention to what's going on in the credit market. This is the ratio of high yield to treasuries. What I'm saying here is credit is not buying the equity rally. What do I mean by that? High yield is underperforming treasuries. That is not a sign of risk taking. If there was risk taking and risk appetite in the marketplace, investors would bid up high yield bonds and junk bonds relative to treasuries, and that's just not the case. This ratio remains below resistance, remains below the 200-day moving average, which is beginning to turn lower. At the same time, the recent rally could not produce an overbought condition, and now the ratio, the RSI rather, is moving towards bearish ranges. Right? Notice how topped with the market back in September, October, double bottom here back in late 18, early 19, and now we're topping again. Should this trend continue lower, I think that carries bearish implications for the equity market, and you can see the correlation. Top, top, bottom, bottom, top. I don't know. You can see, though, the correlation seems to be pretty tight here. If investors were willing to take on risk, they'd be bidding up high yield. Low vol is another theme, and it's breaking out against high beta, another theme that speaks to risk aversion. If investors were willing to take on risk, they'd be willing to buy the high beta stocks, especially relative to the low volatility stocks. That's just not the case. Low vol outperforming high beta, and has been doing so for about a year. Now we've went into this consolidation, and we'll see if we begin to break out. So far, so good. Breakout, retest. Breakout confirmed by momentum. Here's the RSI of the ratio. Became overbought, so we're working off that condition. Did not become oversold on this pullback that tested the rising 200-day moving average. To the extent that low volatility stocks continue to outperform high beta stocks, that's a sign of risk aversion in the marketplace. Something we're going to watch and we'll bring to you every week. Now, growth over value has been a key theme for me. I've walked through the thesis. Who follow me know that that's my thesis, and they know why it's my thesis. People who read our weekly market survival guide know that this is a big part of my thesis, and they know why it's a big part of my thesis. I'm going to bring it to you here today. A little bit of a glimpse of my thought process. In a slowing growth environment, such as what we have in the US and globally when it comes to economic growth, my thesis is that investors will bid up secular growth. Companies that can grow in a slowing growth environment should see their stocks outperform. So what we're looking at here is the Russell 3000 growth versus the Russell 3000 value, and it's a clear uptrend. Went into a bit of a consolidation and then broke out. And now we're trading to all-time highs for the ratio, which is confirmed by momentum as the RSI has become overbought. Notice that the RSI remains in bullish ranges. This trend is likely to continue. When we're looking for long ideas in the portfolio, we want to skew towards growth stocks. In particular, I like large cap growth stocks. My bullish stock of the day is AMP today. It's a holding in the fund we're going to look at next. So if you wanted to express the growth view via an ETF, you can do so with the iShares S&P 500 Growth ETF. The ticker symbol is IVW. It has a bullish Chaikin Power Gauge ETF rating. And we can see here when we conduct our analysis, the same way we do for equities, market and model are in agreement. Bullish rating, outperforming. Oversold and rounding higher with Chaikin money flow being bullish. Stock has held, or the fund rather, has held the rising long-term trend line. Triggered two buy signals today, a money flow buy signal and a relative strength buy signal. For you ETF traders out there who want exposure to the equity market, I like growth over value, and I like playing it with this product, IVW. For those looking for equity ideas, you can go through the holdings of this fund and see which one meet the process. That's going to wrap it for today. Head over to chaikinanalytics.com/today. Sign up for that email to follow along with this show. I will see you back here on Monday.